Good morning, everyone, and welcome to the European crossover webinar. And we're still seeing the euro a bit on the weak side. Really not a whole lot of movement here. I guess not too bad. I mean, compared to the way it used to be a couple of months ago, we'd see some days with about a 25 pip trading range. But we're pairing back a bit here, 930. High for the session so far is at 970. And we have seen equities rebound from where they were late in the U.S. session, which was under quite a bit of trouble. What we can do is take a look see where they stand at the moment. Now, we had looked for support at this 2460, which is 38%. We also had a VWAP from the most significant low, which was, I believe it's March 21st. And we came down here and that held, and we saw the market bounce a bit. And then we broke below it, and really looked like the market was going to push even further. Actually, I had some support at 24.45, but we pushed even beyond that. Finally, we saw the market come back a bit on the close, but still finishing up just below that 24.60. And then since then, we've been on a move higher here. We actually, earlier in the session, had come up here, you can see here, to 24.89 before dipping back all the way to 24.68. So pretty good pullback. And here we are pressing back up against the highs. So we're going to see how far we can come back up on this. Let's just go on and update the fib, which would actually now come in at 25.11. And the low was 24.35. Certainly gives them a bit of a target to go to. This was actually, you can see here where they ran into some trouble yesterday at 25.08. So just a little bit above that, that would take out those highs. Here's the 38%. Obviously, this was huge down here to 24.60. We'll get rid of that now. Take a look at the NASDAQ. Same thing coming back a bit here. Which would be 76.29, basically 76.30. And a low of 74.02. And the high is going to be 79.98. There we go. And you can see here the SPOO's now on highs. That was really a very key level here, this 24.60. It was a bit of a surprise. I had posted that in the room. There was an additional level below the 2460, which was 2455, and we actually went down there. I think we got down to like 2454 or 2453 and change before we saw a nice little rebound. So I was surprised to see this market come down, and okay, I thought, well, maybe there could be a secondary test, but for us to push even beyond 45 to 40 all the way down to 35, that was really bit of a surprise. Now we're starting to see a bit of a rebound. I thought that yesterday, despite what we saw, that was a pretty key area there, that 2461 being the 38%, 2461 also being the VWAP since a significant low, and that's why I think you're seeing more follow through. So I wouldn't be trying to step in the way of this, although we did see a pullback from the 2489 come off by 20 handles, and here we are pressing up a little bit here. There's going to be a little bit of resistance coming in right there. You see right there, 2497. But we're still pushing higher in the SPOOs, even though the NASDAQ hasn't moved to its highs. The SPOOs have pushed even further. So it'll be interesting to see how much further, but a little bit of resistance here at 2497.5. Actually, pretty good little level there. See right there? May see a little bit of trouble there, see? And NASDAQ isn't on its highs, but I would give this thing the benefit of the doubt to let it push, especially after we repair back here. Well, you may see a bit of a pause here, but don't forget, we've already come up to 2490, basically 89, and then sold off a pretty good chunk of change, actually. Wow, about 25 handles. So I wouldn't look for this to hold it that much. It may, but I would think this market would want to come up here to that 2511, which would take out the previous day's highs at 08 before you see a real pullback. We are seeing crude oil also a move higher. You can see here, nice move. I mean, in the Asian session, we were as low as 2080, and look how far we've come up. Almost about $1 and $1.70. Paring back a bit from here, but still a pretty good solid move here. Still moving higher above VWAP. With that, we're going to move into the news. So Aussie and New Zealand dollars feel coronavirus jitters, yields hit record low. The Aussie and New Zealand dollars were hit by a fresh bout of market jitters on Thursday on grim forecasts for the length and depth of the coronavirus pandemic tested investors' appetite for risk. The Aussie was hanging on to 60.68, having fallen almost 1% overnight to as low as 60.39. That left a 62.15 top touched earlier in the week as major resistance. The Kiwi stood at 59.15 after slipping 0.7 overnight. The Antipodean economies have been hit hard by the international travel curbs and strict social distancing, with Australia's government warning restrictions could last for 6 months. Gareth Aird, senior economist at CBA, fears Australia's economic output, the GDP, will shrink by a record 7.5% in the second quarter. As a result, the budget deficit will blow out to 72 billion Aussie dollars for the year. To pay for all this, the government debt would balloon by 270 billion by June next year and take total bonds outstanding to 790 billion and 40% of GDP. With a tidal wave of debt coming in, so it's just as well as the RBA was operating the secondary markets to buy bonds. Right now, SPOOs are at 2498.5. It offered to pick up another $2 billion of 2024 to 2027 paper on Thursday, traders said that the market was testing how flexible the central bank intended to be about a 0.25% target for 3-year yields. We doubt the RBA would declare mission accomplished and that to come to market, said David Plank, head of Asia Economics. We think the decision to continue purchasing is very important and that it provides ongoing support for the market and signals the RBA wants to see further flattening in this part of the curve. 3-year bonds were at all-time highs at 99.78. And moving here. I think the dollar firm overall, but oil price jumps boost commodity currencies. The dollar gave up some of its recent gains on Thursday after a 10% jump in oil prices boosted commodity-linked currencies, though uncertainties over the coronavirus pandemic kept the safe haven greenback strong against other currencies. Oil prices leapt on hopes that the U.S. diplomacy would succeed in persuading top exporters Saudi Arabia and Russia to end a price war that has driven the crude oil market to its lowest levels in almost 2 decades. The lifted commodity currencies, with the Aussie dollar gaining to 61.10, but and the lift and the Canadian dollar firming 65 tenths to 141.46. But against most major currencies, the dollar held firm as investors, unnerved by the massive disruption to global trade caused the pandemic, took comfort from holding cash dollars. Markets were spooked after Trump's warning late Tuesday that Americans faced a painful 2 weeks ahead in fighting the coronavirus. If America's optimistic president is warning the worst of the pandemic is yet to come, what factory in their right mind would keep the doors open and workers on the payroll, said Chris Rupke. With only a few actual data points so far, results indicate this is looking more like a depression than a garden variety recession. Starkest evidence of the damage came last week with weekly jobless claims. And the pandemic has shown few signs of abating. While there are signs of indications infections in hard-hit Italy might be leveling off, cases are growing rapidly. Trade is inactive as a few want to take extra risks, and for traders, their own health is becoming more important than trading. The virus is spreading out quickly in emerging market countries which could struggle to contain an epidemic. Such worries are putting additional stress on countries saddled with economic vulnerabilities, such as the wide current account deficits. So with that, we'll just go on moving to the analysis. Okay, so the euro has pressured lower, testing 09 flat before rallying back to close above 950. The pair may still test 882, which would be support, and 1008 is resistance. So that's going to be our support. It's going to be 882. We're really just trying to press this thing lower right now for the most part. Resistance, which I said could come as high as 1008. I think we have to pair this to come in right there, which would be 984 for resistance. Oh, and let's quickly take a look at the economic calendar. We do have producer prices, Eurozone producer prices at the top of the hour. Initial jobless claims. I just heard over the squawk. Goldman Sachs is looking for 6 million. That's their call, 6 million in jobless claims. We do have Canadian trade balance at 8:30 Eastern, and ISM New York Index at 9:45 Eastern, with durables and factory orders at 10 a.m. Eastern. So let's go and get back to the analysis. And you can see the analysis is fairly short, and I don't reference too much that in the past we've seen where we'll reference what story or what report as far as economic activity. Look, with the runs we've had, these wild swings, we mentioned this a couple of days ago, with these wild swings, I mean, you could say things look a little bit bullish, or not bullish, but they're kind of holding their own now, and then the cable still sells off for another 300 pips. You see what I'm saying? Or things are really starting to look pretty bad, and then the cable goes and rips for, 350 pips. So right now, I'm just sticking to the levels. Really, that's the only thing that you can hang your hat on. At least hey, this is where I don't want it to go to if I'm short or long, whatever the case may be. So cable was stuck in the mud in a very tight range. You can clearly see that yesterday. So resistance is going to be 25.20, precedent if we do go and push that high, and support is going to be 22.54. We're really stuck here, and it's just a matter of where they're going to be able to go and push this. So once again, 25.20. That's actually a little bit almost out of range here, because if they do pop the stops, I mean, right here is where we've got some resistance, which is going to be 24.86. But that just visits right up here at the top. If we're going to goose the stops, how much further can we go? Where would we see a pause? And that's where we're coming up with 25.20. So the Aussie has continued to hold 60.63 on a closing basis. A close below generates a sell signal. Support will be, if we do break on that, initial supports can be 60.30 with resistance at 61.72. 60.30, 61.72. Let's go move on to the Kiwi. Now the Kiwi held 59.14 on the close. On a break lower, support will be 58.53. And let me see, is this thing trading right or what? Hang on. Bear with me. I don't think it's trading right. Hold on. Bear with me. I don't feel. There we go. And let's go back to the Kiwi. Okay, great. Okay, so getting back here, the Kiwi held 59.14 on the close. On a break lower, support will be 58.53. Resistance will be 60.11. So 58.53. So the dollar CAD closed higher beyond the last three sessions, albeit below 42 even. Resistance will be 42.74 with support at 40.59. We've already actually made a dip lower already down here, but we haven't come down yet to 40.59. So, and as far as resistance, and this could be, as I mentioned, 42.74 if we can pop up there. And let's go on to the dollar peso. So the dollar peso, it's all the way. The dollar peso closed higher above 24 with the best close in the prior 5 sessions. Resistance will be 24.60 with support at 23.79. And we just saw the SPOOs pop up right now just at 25.02. So I think people are trying to get in the way of that. I mentioned be cautious because I was saying that 24, and I'm going to jump back here just from a technical standpoint. That's why I want to make a look at this. Take a look real quick. You know, we talked about, remember, we had that resistance right here. We said, hey, look, this level here, you know, coming into 24.96 or 24.97. But one of the things I cautioned was I said, hey, look, I think that would have been a great level if it was our first go. So lots of times you'll see me, I scalp, and I'll take things on a first go. Lots of times I won't want it if it's on a second go. Case in point, you can see here, as I said, this would have been a good level and say, okay, maybe you fade against that level. But don't forget, we've already came down here that 24.60 was a huge 38%. I mean, it's huge, as well as a key VWAP. But more importantly is earlier in Asia, we talked about this. We rallied up to 24.90, and then we turned around and shed nearly 24 handles. So anybody who stepped in and took a short against that, they've already been rewarded. I mean, this king came off 24 handles. So when you come back here and challenge it, all you're doing is taking it out by 7 handles. And there's a good chance that you weren't going to immediately get rewarded. Now we've made up to 2502, so it may have been some people, and we'll put it here for a little bit better context. They may have just got stopped out who tried to come in at 96, 97, and they said, okay, I'll put my stop at 2501 or 2501 and a half, 2502, and now they got stopped out. But once again, I really wouldn't be interested in trying to. The last high was, remember, that was a 2508. So if you're trying to take a stab at this or something, I really wouldn't be interested until we got to 2508. And then don't forget, 2511 is going to be the 38%, which would take out that high from yesterday, which was 2508 for the morning session. We're pairing back a little bit, so it might have been some people that did get stopped out that tried to challenge it here in the 97, came in here and said, well, I'll put my stop at 99, even 01, and they may have got, but once again, I still really want to be challenging because this was huge down here. Now I think there's a lot of short covering, so this can see a lot further to go. I would not be surprised to see this pair or this index get to 2530 in the U.S. session. Now, of course, there's going to be the concerns with jobless claims. Goldman Sachs, as I said, is expecting like 6 million, so that's going to may spook the market a little bit from pushing much higher. But once again, that's just a case in point. You come down here instead of coming to a very key level as well as a 38% and a VWAP. So you have to allow the market to digest. And so people that may have been short, they probably want to see far better prices before they re-engage the market, and why we can have a little bit further to run. Anyway, I thought that was important from looking from a technical standpoint from really any market. Once you've gotten overdone, don't be so quick to try and jump back in, because you'll probably have people that may even pick it up as a bargain that they won't be willing to let go of their longs until we can get a more fair price. And for them, if you look at this market, a fair price probably wouldn't be till about the 25.10. But anyway, let's go and get back to the analysis. So we just completed the dollar peso, and let's go and jump into the dollar yen. So the dollar yen closed lower, testing and holding above 7 even. Resistance will be 805 with support at 677. So once again, these ranges a little bit wider. So we had 693, and the low was, oh wow, okay. Yesterday's low, that was actually the low. 693 was the low. That's yesterday's support. So I guess not a bad call. We've actually moving it now to 677. And if we do get the bounce back, 805. I was a bit surprised because I'm not even trading currencies at this time. I'm focused really just on the S&Ps. Have my hands full enough with that. I do follow the currencies, but I'm not so close. Like I said, I didn't even realize. I mean, we had 693, and that was actually the low in the dollar yen. Yesterday's support. Let's go and move into the cash dollar index. But once again, that's all I'm focusing is on the technicals. That's what I'm saying is that, and I think that's what you have to focus on, the way these markets are trading. Just it's all about the levels at this point. Where am I right, and where, more importantly, where am I wrong? If you get into a trade, regardless of what pair it is. On the dollar index, it closed at the best levels and over the prior 3 sessions. Resistance will be 99.88. It's 99.88 with support at 99.01. So 99.88 so far. High has been 99.71. So we're looking at 99.88. And support 99.01. With that, we'll move into the cross rates. So we've been going down here for 4 straight days. We finally got, and we did come in right into some support here, which was at support level 63.43. We actually had our low for 63.24, and the low was 63.20. So not bad, not bad. But we'll go with this level, which is going to be 63.43. And once again, yeah, we missed the low by 4 pips. And like I said, I'm just looking at straight up technicals, not even paying attention to the news or whatever. I mean, we do cover a couple of key stories just to provide like what the flavor is for the morning. But right now, the way these markets are trading, just go with the levels. At least that's my take. And it's working out pretty good. Bottom ticked the yen, which I'm not even trading the yen, and missed the Kiwi yen by 4 pips. But anyway, today's support is going to be 63.43. And looking at resistance, once again, we've gone for 4 straight days, kind of like a mirror of like the S&Ps in the set, but obviously the S&Ps more boxed in on one day. But we're 4 straight days, so you would expect a little bit of a bounce. Now, where can that take us? We try and look for some confluence. So you see the high here, you see the open here, and that coincides with the high here. And we've been trading rather tight, so that's going to be a resistance right there. 64.25. Now let's go to the euro yen. This thing is still flying like a rock. It's obviously we're going to want to go to this key level here, and then a little bit of an overshoot, which is that low there. See there? And that's going to be 17 even. So 117 even. With resistance, it's actually just going to be yesterday's high, which confluences with this low here. You see that? It's just going to be 1771. Moving on to the euro odd. We did get a bit of a hammer bottom yesterday, and the market's a bit oversold, but it's not moving a whole lot for now. It's obvious where the main key resistance is. I just don't think we'll make it there today. So we're just going to go just that high, which is above yesterday's high, which would be 81.68. And support, let's go into a shorter time frame. Right now, just going with the touches and before that low. And you can see that confluences with this low here. So that would put us at 78.66. I'll tell you what, we're going to lower that high. So it's going to be 79.95. And moving to the Euro Kiwi. Starting to press press the lows again here, but we're going to keep it pretty tight. So right there, 82.95. And let's go on a shorter time frame for the resistance. Right there, just a little bit lower. You see this notch there? That'll be resistance, which is 84.71. 'And moving into the ASEAN. At least trying to make a stand here. You can see right there. We'll go into the intraday to get a little bit closer look. So 65.75 is going to be the resistance. $65.03 for support. And let's go move on to the guppy. Same thing, fairly tight range here. Moving into the smaller time frame. Right there, coming across all these touches for resistance, if we can get up that far. 33.46. Boy, that is tight. Support comes in right there at 32.15. And lastly, the starting odd. Might as well just stay within this smaller time frame. Well, they moved higher, and then they broke them low and brought them right back up here. So the press would still be a little bit higher, but resistance is going to come in right there. 0479. Oh, 224. Okay, and that's got, and we can see the euro still under pressure. We're still sliding back here. IFR stating that European bonds are slipping across the run, so probably seeing this weakness here. Although in different ways, lots of times we've seen lower bonds, higher rates, which at times would be supportive for the euro. But in this particular situation, I don't think that that's the case that you're going to necessarily see here. So, just a quick overview. Looking at the S&Ps, we got up to 2502. We dipped down to 97. We came right back up to 01. Mark's kind of dipping just a bit here. Quiet session right now, so not too surprising. Might dip back a little bit. We did stop out some people, so we just come back in a little bit. But once again, the thing that's going to help if someone's shorter stepping here is that ahead of the jobless claims, Goldman Sachs is looking for 6 million. So that could keep a lid from the market getting too far, even though I think it's real buying. It's just primarily short covering or shorts waiting for better prices. But if someone stepped in a little bit short, that may help them a little bit. Maybe we can see another dip back towards 90. That's the one thing that's helped. And that news from Goldman Sachs came in about right here. So we did stop up, and then we did dip, and that was, like I said, Goldman Sachs is looking for 6 million. Crude is pretty much where it was earlier. Just take a quick look at the gold market. So a pretty good little run here in the gold market. Look at that. We got up as high as 16.13, and now we've come off $10. But we are currently at VWAP here. But certainly a nice little bounce back. You can see here. NAS got up here, and we're pairing back a bit here. SPOO's holding once again at 24.95, but I think from a value standpoint, I'd much rather see this thing get up at least to 25 away before I feel real comfortable. You can come in and scalp a couple of things, but you're not really getting rewarded. I mean, I scalp for shorter amounts, and even then, I wouldn't feel that comfortable, coming in, which you had a chance to come in back at 2,500, and at 24.97, you're getting rewarded for 3 handles, and really, to my thoughts. You're taking a bit of risk here because once again, the market was really oversold, came into a very key level, which was at 24.76, which there was secondary support or just a little bit lower, 24.66. Initially at 76 it held. And then, of course, at 24.61 is at 38%, a key VWAP at 24.61. So a lot of short covering had been done, and that's what I'm thinking this market could still work higher. The one thing that's going to kind of keep a lid on it for a little bit of time is going to be, weekly jobless claims. As I mentioned, Goldman Sachs looking for 6 million. That'll probably keep a little bit of a lid here, but I really wouldn't be that interested myself in coming in here. I didn't see the first move up here, which made it up to 24.90 before it sold off a decent amount. But other than that, I wouldn't have been that on that first go round. Other than that, really wouldn't be that interested in trying to do anything with this market from a shorter scalping standpoint, because I think the market, we came off so far, so fast, and at a key level, and then we came down here that I think there's probably been some reasonable short covering. Hey, you know what? If it breaks lower, even lower, hey, so be it. I mean, all I try and do is try and look at my parameters for the next 24 hours. If it meets those, I'm able to step in. Just like yesterday, when they broke lower, I was surprised when we revisited. I'm like, okay, well, they're revisiting. But when we broke lower, went to 24.45, 24.40, you know what? If I'm wrong, I'm wrong as far as I wasn't going to come back into the market. And if it would have kept on and broken lower to 24.15 or whatever, okay, so be it. I mean, I'm not going to go on and chase after something. I've had so many losses chasing things that, I try not to go and do that. And if I have to reset and recalibrate for the next day, so be it. I may not be able to trade then if the market's not meeting at least what my idea is as far as good levels are going to come in. Here to make money, not here to try to pontificate or, pull out, crystal ball or anything like that. Just trying to trade within what parameters the market will give me. Anyway, that being said, thanks for joining us here on the European Crossover webinar. We'll see you in the chat room. Have a good day. Best of luck trading.